Brunell for Bitcoin Magazine, and I am joined by Dan Held from Kraken about earning yield on your Bitcoin. He had a fascinating tweet I wanted to ask him more questions about, so here he is. All right, well, Dan, I'm excited to chat with you. This is our first time doing an interview since Coin Stories. How you been?
Doing well, doing well. It's been a wild year since we last recorded.
I know. Well, I'm super fascinated by this tweet. You gave a November Bitcoin yield update, and it says that over the last 2 years, you've earned two Bitcoins. I would love to earn two Bitcoins. So, can you talk a little bit about sort of these updates that you've been posting and where you even started with this?
Yeah, great question. A lot of people haven't, gone back to the beginning of why I did this. So back in 2019, there were new platforms out there, kind of like BlockFi, Ledin, and these other companies that allowed you to earn yield on your Bitcoin. So you lend out your Bitcoin and they give you your Bitcoin back. Well, hopefully give you your Bitcoin back plus interest. And so it's kind of the start of very primitive Bitcoin banking. And for me, this was really fascinating because I've hodled onto my Bitcoin a long time and I'd rather not sell it. I'd rather either borrow against it or lend it out and earn a yield and be able to live off something like that, right? So for me, I started to chronicle my explorations in the space. And I felt like the only honest way to do it was to do it publicly. So I publicly tell people where I have my coins. I tell people before I move my coins. So if I don't move my coins and a company goes under, I'm going to be the last one out. So I felt like that was like kind of the only ethical way to do this. So I telegraph my moves typically before I do them, like 90% of the time before I do them, just because I want to make sure that everyone kind of sees this transparent maneuvering and that I don't have any preferential, insider access to where I hear that there's an issue going on. I move my funds first. So I'm very transparent with where I have my money and I typically telegraph it before. And I put it into a Google sheet and it's kind of been like a personal hobby or fascination of mine, which is like being obsessed with how to earn a yield on my Bitcoin. And I'm sort of doing the exploration in public. And so that's what the 2 years have been, is me monthly doing an exploration of these different ways you can earn yield on your Bitcoin and showing everyone how to do it myself.
Well, I love it because you're kind of learning and then people are learning alongside you. And I love the transparency as well. So, I mean, in this tweet, you're talking about earning yield on 25 Bitcoin. So, I mean, a lot of people don't like to talk about how much they have. And I'm assuming you're not necessarily staking everything. So, why did you feel like you even wanted to put that out there? Because, in the world of today, privacy is so paramount, operational security. Why did you want to be that transparent?
Yeah, for most people, telegraphing any sort of amount of Bitcoin that you own, I think is a bad idea. People automatically assume I have a lot of Bitcoin. So
I know. They
look,
they assume we all have a ton. It's like I wish.
yeah, I know. Look, I mean, I wish I would have bought more back in the day. But that was I think an amount that made it sort of substantial. I got to remember this is back in 2019. So the price of Bitcoin is around $10,000. So that was only around was it 250,000 back then? So that actually wasn't that much money back then. And then since it's public, I just kept rolling it into different other vehicles and I've been transparent about it. But yeah, you're right. For most Bitcoiners, I do not recommend you disclose how many Bitcoin you have. For me, I've been around 9 years in the space. People assume I have 25 Bitcoin. So I wasn't too uncomfortable disclosing that.
Got it. Well, obviously, people know that if you put your money right now in a traditional bank account, you're getting nothing, right? And with inflation, you're getting negative rates at this point. So you talk about the two ways to earn yield on your Bitcoin. You talk about lending, which is the easiest, most popular, and then covered calls, which are harder, but you could get a yield all the way up to 80%. So can you talk a little bit about the difference? And then maybe we'll go into just how you're doing it and what platforms you're doing this on.
Totally. I think in general, a good rule of thumb is that a yield is around monetizing tail risk. So if you're lending out your Bitcoin in sort of a classic manner, so you're lending out your Bitcoin to let in BlockFi, those companies, they're taking that Bitcoin and what they're doing with it is they're lending it out to other counterparties. And so what you're doing is you're getting a yield because they're compensating you for the risk that you're taking. So you're monetizing the tail risk event that they don't pay back the principal. With covered calls, all of these are under that same principle. Covered calls are much more transparent with the trade-offs that you're making risk-wise. So I think covered calls are really cool. So covered calls are essentially you own Bitcoin, and that means that the call is covered. And there's someone else who wants to buy an option. So you sell a covered call. And what you're doing is you're selling your upside past something called a strike price. So let's say you sell a covered call for Bitcoin at $100,000 a Bitcoin. Well, the buyer of the call option's like, okay, cool. I'm going to take that bet that Bitcoin's going to be over $100,000 by that expiration. And they'll give you something called a premium for that opportunity. And that's what the yield is from, is you're selling upside on your Bitcoin. So you're selling upside above a certain strike at a certain date. And the yield is basically equivalent to the probability that might happen based on what the market is pricing that in. So if you want to think about it in very simplistic terms, near term, very far away from the current price, very small amount of yield, because that probability of that happening is very, very low. Very close to the current price over a very long duration means a very high yield, because that probability is very high. So there's a couple different strategies that you can employ. One is, if you don't ever want to sell your Bitcoin, which is where I'm in that boat, I sell strikes 2 to 3 times the current price in a very short duration. So like, for example, like December 31st, 2021, you could sell a covered call at Bitcoin at $200,000 at Bitcoin. Now, that's not going to give you a very good yield, but at least you understand perfectly the risk that you're taking, versus the other strategies where you're lending out your Bitcoin and they're lending it out to other counterparties, and you may not be able to fully understand that risk. So it's kind of a cool trade-off. It just kind of depends on what sort of risk appetite you have and what you feel comfortable with. Now, there's also another strategy that's not necessarily yield generation. It's more of an exit strategy. But let's say your partner goes, I'd like us to go buy a house. And you're like, no, I want to hodl my Bitcoin. I'm sure this conversation happens a lot with different partnerships, right? With different couples. So in that relationship, what do? A covered call at the money is your perfect opportunity. So let's say Bitcoin's at $100,000 and your partner comes to you with this proposition and you're like, okay, sure, let's go do this. So what you do is you sell an at the money covered call. That means you sell a call with a strike that's the current price for a duration of greater than 1 year. What's really cool about that is, let's say it's in the middle of a bull run and you think in a year, the bull run's going to be over. If you sell a covered call at the money for 1 year, the yield is like 50%. So you get 50% of the value of your Bitcoin immediately in a lump sum, and you can do whatever you want with that money. And then at a year from now, if Bitcoin is higher than $100,000, you have to sell your Bitcoin to the counterparty at $100,000 of Bitcoin, no matter how high the price went. That's what you're selling, is you're selling that upside. But if you were going to sell your Bitcoin anyways to go buy a home, you might as well try this, because in this scenario, if Bitcoin's price is lower than $100,000 at the end of this, you get your Bitcoin back. So it's kind of like the perfect trade for someone who has a liquidity event that they need to do right now. I came up with the partnership example because that's a good one, of like, you've got your relationship and you want to preserve that, or your kid wants to go to college, or you need a new car. People have life events. We can't hodl for forever. I mean, I'm going to try to, but I think selling covered calls at the money, if you were going to sell anyways, is a really cool way to still potentially have upside on Bitcoin. Well, to still potentially hold your Bitcoin, but also be able to extract some value from it. So those are two different strategies to earn a yield from your Bitcoin. I prefer the first one, which is like much lower risk, and you keep much more of the upside. But the other one's a great scenario if you've got a life event and you need liquidity right away.
Wow. Okay, that's interesting. Is this adding to the volatility of Bitcoin?
No, it's more of the granular pricing on volatility, because with these different options, what they allow for is the ability for different counterparties to granularly define risk, and also be able to hedge that risk. So different miners, traders, hodlers could de-risk certain events. Here's a good example too. Like, on the other side, if you want to buy a put, buying a put means that you expect the price to go lower. So let's say your whole net worth is in Bitcoin, right? And you have the same scenario where there's a life event. You and your partner, or you by yourself, want to go buy a home. And you're like, well, if Bitcoin dips, I'm not going to be able to afford anything that I was thinking I was going to go buy, or like I need a surgery or anything like that, right? So you could buy a put and have that be like portfolio insurance. So if Bitcoin goes down, you have to pay for this, right? So you're paying the seller of the put, you're paying them a premium, but it's sort of like portfolio insurance. So for a certain percentage, you can ensure if Bitcoin dips below a certain value that you'll be compensated for that. So options are, I think, a really cool way to not increase volatility or decrease volatility, but more granularly price it and define it.
Yeah, I have to admit, before I was really into Bitcoin, I had options in the stock market, but I haven't done it with Bitcoin. And I'm sure there are some people who probably had calls on $100,000 Bitcoin, or the 98,000 this month or next month, who are a little bit nervous about those. But what platforms are you doing this on? Because now I feel like the space is growing so quickly. The lending and the yield farming services are growing and multiplying. So what do you use?
Yeah, so it depends on what service you're looking for. If you're looking for like a lending platform, I choose Ledin. Ledin, I think, is one of the best places to lend out your Bitcoin. Love the team. They're strong Bitcoiners. I don't know if you guys have ever met Mauricio, but he's awesome. That whole team is just like very strong Bitcoiner. They've taken the slow and steady pace, which I actually appreciate from a risk perspective, versus some other companies that I think kind of played hard and fast with the rules. And so I really like the team. They're awesome. I've known them for over a year now. Um, and so for lending for lending specifically, like lending out to earn a yield, those folks, I also use Genesis. Um, and now this isn't how many a Bitcoin I have at Genesis, but their minimum is 100 Bitcoin as a customer. So it's a little steep for most people, but Genesis is also great. Genesis actually powered the back end of Ledin's lending book for quite some time. So Genesis is a great service out there that's under the DCG family. And then if you want to do, so there's also a concept we didn't cover earlier, which is around lending to exchange margin pools. Bitfinex has a really cool, great interface for that. And that's a pretty low risk way to lend out your Bitcoin, because you're lending it out to margin folks who are on margin on these exchanges. And you're basically just trusting in the exchange's margin liquidation engine, and also their ability of having like a large cash balance sheet to back that position up. So Bitfinex has a great tool, like a great GUI for that. Same with FTX. And then, if you're trading options, LedgerX is the only CFTC regulated options platform in the US. I forget what sort of requirements are there. Obviously I've got some special ones in terms of like being accredited and other levels. But I forget which ones are required there. There's also Deribit, which is international, but I believe that they ban US customers. So if you have a US IP, they're going to give you a hard time. If you're an ECP, so if you've got a very high net worth, you're allowed to trade at Kraken using Kraken's OTC desk. So Kraken does do OTC options. And Judika Chow heads that up. She used to be a Goldman derivatives trader. So those are the places you can trade. I think the OTC options desk is pretty awesome that Judika runs. So that with LedgerX, which is owned by FTX, but now LedgerX has like really wide spreads and like low liquidity. Deribit doesn't really service US customers. So you're kind of in this tricky spot. But OTC derivatives, I think, are really popular. The other desks do this as well, like Galaxy, Genesis, and the other ones. So if you're very high net worth and you want to trade in size, then trading with an OTC desk makes a ton of sense versus trying to find liquidity on a US exchange, or taking the really risky route and going to Deribit and putting your capital at risk.
Got it. Well, you also talked about regulation, and you brought up the SEC in your tweet. So can you talk a little bit about that and maybe some of the risk that's involved? I mean, you kind of made it clear that you don't think that the SEC would come in and necessarily allow these companies to fail, but inherently a lot of this does carry some risk, right, when you're lending out your Bitcoins?
Yeah, there's a lot of levels of risk. And so if we want to take the regulatory risk, and we'll break this out on its own. So regulatory risk is around, will regulators crack down on certain exchanges, venues, or services that provide this lending and yield generating service? So some of them are clearly in violation of SEC regulations. And there's been, as we all know, a public spat between Coinbase and the SEC over their lending product. Other companies have received letters. And so typically the ones that will be lower risk are ones that only dealt with accredited individuals, since they are allowed to engage in these sort of yield generation activities. For example, Genesis is immune to any of that. Same with companies that don't service US customers. So it's really kind of dependent on, so if they service US customers, they have to be accredited. If they don't service US customers, they have to, or if they don't service it, or if they don't service US customers, that's fine, because that doesn't fall under the SEC purview. And again, I'm not a regulatory leader. I'm not an expert on this. This is just basically what I've heard through the grapevine. in terms of, why the SEC is targeting some companies versus other ones. Overall, I think like the SEC is trying to exert more force and kind of control over the space. They've talked about stable coins as well being under their purview. So I think that this is, yield generation, stable coins, all of these, I think kind of fall under like the SEC's new, kind of new perspective of like, hey, we own this, we control this in crypto.
Now, is this something you would recommend to people who are new to this space, or would you tell them to just, set it and forget it? You already get a pretty good amount of appreciation just by having Bitcoin, right?
Yeah, so it depends on everyone's risk tolerance. I'm not going to go push you, push someone out there and be like, "Yo, you have to go do this." Um, Look, I've been around 9 years and I don't want to sell my Bitcoin. So like, it's like sell my Bitcoin, borrow against my Bitcoin, or lend about my Bitcoin, right? Like we all, we all are eventually going to perish someday. And so like, this is my want to take risk. My want is like, okay, well, I think that this is the best way to utilize my Bitcoin, utilize my capital. And so for me, it was a long-term strategy of like an exit, if you will. I don't sell my Bitcoin, but I take on a little bit of risk and just have that, just to throw off a yield. That's, some people are terrified by that, and that's totally fine. If that freaks you out, then don't do it. Just hodl. Hodling is great. Or if you want to borrow against your Bitcoin instead, that's totally fine too. There's great companies out there like Unchained Capital that provide those services. So yeah, just choose whatever you feel is like your sort of risk tolerance. Again, for me, I've almost been in for a decade. So this is me feeling like a little risky, throwing off a little bit of a yield because I don't want to sell my Bitcoin. Now, by the way, blanket statement here, don't risk all of your Bitcoin in these lending platforms. For sure, don't do that. I think that that's a very risky maneuver. Again, they're lending out your Bitcoin to other counterparties, and you're being compensated for that risk in the form of interest. It's because it's risky. So don't risk your whole Bitcoin stack. Definitely don't do that. But up to you to determine if you want to do it or what percentage of your portfolio you want to allocate.
That's great advice. Anything else you want to share with people? This was a really fascinating tweet. I feel like you were still tweeting before we even came on. You've got like, what, 25 updates in this thing? So anything else you want to share?
Yeah. So yeah, check out this tweet storm. It comes out every single month. So I update this every month. You can check out my Google sheet. Natalie, if you could please link to that sheet as well so people could check it out. Look, dig in deep, really question, like, will I be okay if I lose my principal, if I lent it out? You got to be mentally okay with these sort of things, taking on this type of risk. Don't risk your whole stack. And then also explore some of the Bitcoin DeFi stuff. For example, like Lightning Pool. Lightning Pool or coin joins, you can actually earn a yield on your Bitcoin doing like Bitcoin DeFi-esque activities. And these touch Bitcoin main chain, which is really cool. So some of these require more technical tooling, but you should go explore this, because I think the more people that explore it, the more people will find like, whoa, there's like super low risk ways to earn yield on your Bitcoin that are really good for the Bitcoin network, like providing channel liquidity on Lightning Pool. And for coin joins, you're providing coins to mix with. So those coins enable more people to remain pseudonymous and be able to preserve their privacy. So I think that those two things are good for the Bitcoin network.
Got it. And don't get wrecked. Right?
Yeah. Don't get wrecked, hodl. It's a long journey. Bitcoin, I think, is still super, super early in its development. I mean, we just hit $1 trillion market cap, and there's negative $16 trillion of negatively yielding debt. So like, Bitcoin's got a long ways to go. So yeah, hodl on. And if you feel a little bit risky, try some of the lending platforms. If you don't, totally cool. Just hodl onto your Bitcoin.
Yep.